Hey everyone, thanks for checking in our latest Traded Black podcast. I'm your host, Shad Dales. Last week we had Jim Cacioppo, CEO of Jushi Holdings, on to talk about the latest earnings, and it's impressive numbers to say the least. Well, today we want to dive into the key growth states that they operate in, including Pennsylvania, Ohio, and Virginia. Look, when the HHS Reddendum came out back in the fall of 2023, we saw some real, important tier 2 type companies that absolutely ripped. When we look at possibly rescheduling announced, let's say happening some point, hopefully in 2025, what are some of those key companies outside of the GTIs and True Leaves that could see huge upside potential in the event that we get reform in cannabis? Well, these are some of the interviews that we want to conduct over the few months to find out more about what these stories are and how they've developed over the past 12 months. So with that, let's welcome in Jushi Holdings CEO Jim Cacioppo. Good to see you again. How are things?
Good, Chad. Thanks for having me on.
Yeah. So I know we had a great live stream last week. I know you were fired up. There was some great numbers, to say the least. But all in all, I know it's been probably, a week since those were announced. What's been the feedback since the actual reports came out and some of the people that have talked about it? Have you had some good dialogue and conversations with people?
Yes. We talked to the analysts and some large investors, and everybody really loves the cash flow from operations. The record cash flow from operations is $7.2 million.
Yeah.
They love that we did $21.6 million of cash flow from operations for the year, and we paid down, I think last year, almost $20 million of debt. We got that behind us, and then of course I think the biggest increment to Jushi that really sort of changed the story when we did our fourth quarter earnings report. We sort of rolled out this growth strategy, the 7 and 7 retail strategy, and some incremental investment in the grow processors to grow, and people are really latching on to that. So I think those are the key pillars.
Well, as I said off the top, look, we saw back in the fall of 2023, there were some key stocks that absolutely moved when we saw some reform announcements. And in the event that we do get that, hopefully at some point this year, there's going to be some real upside potential, especially when you see how much a lot of these share prices have been suppressed, as is the case with your company. But when we look over the last 12 months, a lot of people familiar with the Jushi name, the Jushi brand, but your story from a PR standpoint, for the most part, has been relatively quiet, keeping your cards closely. And obviously the numbers have demonstrated what you've been doing over the last 12 months. So before we get into some of these growth states, how would you best describe where the company is today versus where it was 12, 18 months ago?
Yeah, that's a good point, Shad. We've changed a lot, and we did go kind of quiet because what we have been doing since April of 22 is getting much more efficient. There's been a big cost element to that. Our peak was 1,650 employees. We have 40 stores now, and I think we're about 1,250. So we've opened a lot of stores where stores take a lot of employees because it's round the clock kind of thing, and we're down 400 employees. That's an easy number to give to say, hey, what'd you do? So I think that, plus there's a lot of operating efficiencies that go with that, improved genetics, improved machines, just having a better, more cohesive management team, particularly in grower processors. We come a long way. And then, of course, commercial was a new group to us 2.5 years ago. We used to just do it from the senior management level, and we built a group, and that's become more cohesive. And retail's been our strong spot, but we've actually started fortifying that, getting back to fortifying and getting more efficiencies out of that.
Well, it's all about trial and error, as you know, in this industry. You learn, but if you learn from some of those, I don't want to say mistakes, it's just experiences.
Oh, absolutely. The other important thing in the last 18 months, because that was a great question, is the debt story. So if I think we really clarified that. We have when we do a lot of acquisitions, we're very savvy. I've been an investor in distressed and other areas, stocks and private equity for a long time, and negotiated a lot of stuff. So we make our notes indemnity notes. So if something goes wrong, you're allowed to just claw back. You don't have to go back to the seller to get the money. So I think the market has really understood that there's this $20 million of debt related to our Massachusetts acquisition that really shouldn't be included in the GAAP financial statements. But the auditors with startup companies like ours, and by the way, the whole industry, because cannabis, they're very conservative. You see that with our tax liability
Yep.
presentation and stuff like that for the industry. So I think we clarified things like that, but we also paid down from our peak about $30 million of debt.
That's
And,
huge.
and we did that, right? We did that from cash flow from operations. And we also did that by getting some other additional cash from asset sales and things like the government with tax refunds and other ways of getting money from the
Yeah.
government. So I think that, and we recently fortified our cash balance. This is a 2025 event where we factored some these employment retention credit, which has been sitting out there forever as receivable for us. And I think the market sort of kind of gave up on that. I know as a CEO, I never included it in my cash flow projections anymore because it got so unclear. And it was because there was a lot of fraud in the program, so the government shut it down. We obviously had a very legitimate claim presented in a very legitimate way by outside lawyers and consultants who do all the work for you and sign off on it, very importantly. And so we got $5.1 million from a factoring firm, and we also got about $1.3 million from the government in the first quarter. And then we raised $4.7 million from these second lien notes, which I was the biggest investor, about $3.5 million. So when you put all that together, our cash is right back at the level where we want it to be, and we had paid down all that debt. And very importantly, we started investing in the business and doing acquisitions and opening up stores.
Healthy balance sheet, right? When the opportunity presents itself. Look, I know when I listen to you, when you break down numbers, and this is where I'm actually interested to see more about who you are and the team that you basically have assembled at Jushi, because I know a lot of people have followed your story for quite some time, but you're a former hedge fund manager. What got you interested in the cannabis space?
Yeah, I mean, and I'd like to point out the pedigree. I started this firm with four co-founders, all great pedigree. One big business entrepreneur in the cannabis Canada industry, very well known, and then one was a vice chairman at Deutsche Bank. They were never designed to be with us forever. It was really about the startup and capital raising, and some guidance along the way. And then John and I are running it. I went to Harvard Business School, right? And I was in investment banking for 6 years, and then got into hedge fund, very very luckily, by the way. And I co-managed a $5.5 billion fund. I was the only other equity owner, and then I then started one that went to $2.3 billion. About a 20-year career in managing very significant amounts of capital for third parties in the hedge fund space. And then John came with me in that, and John went to a Northwestern JD MBA and went to Princeton before that.
Wow.
Super smart guy. He's kind
of all. Is that all?
That's it for education. That's all you need. And he's a true mathlete. I mean, he's when I in a meeting, I'll refer to John and say, John, what's that equate? What does that add up? Not add up to, but what's the math around that? He'll give the answer off the top of his head. So we have and then that's been since the beginning. Trent, he's been with us for a long time. Our guy who does compliance and other legal things for us, Matt Leith, has been here since our first year. And our head of human resource and the team has been with us for 4 or 5 years, and really, and one of the second senior person in human resources 8 years, and the whole time basically 7 years or whatever the hell it is. But I mean, there's a cohesiveness around the management. The guy who's running our grower processors is 4 years with us. So we have the management team that's worked its way up. I'm familiar with them. They're familiar with everybody else and each other. So we work really, really well together. And if you look at some of these tier twos that have gone, and I really don't like, I don't like the fact when the tier ones, throw negative jabs at tier twos to build themselves up, or what they used to do much more often. I think it's low class, to be quite honest with you. And they make plenty of mistakes out of that I could point out and other people have pointed out. I think I have at times.
I get it.
Upset. But then people did it to each other. But that was a bad thing. We're beyond that as an industry. But having said that, there's a couple of companies that have had some tough times in restructuring, and they're big tier twos, bigger than us. And it's very tough to keep your management team together in that kind of circumstance when you remain over levered for years and years and years.
Hmm.
You don't have a growth story and you've lost your senior leadership and now it keeps turning over. So I think this sort of sets us apart from most of the smaller companies. And I think you hit on this.
You keep the
Fantastic
core.
point. Yeah, I think it's like overlooked by analysts. Like if I look at these analyst reports, they never talk about the continuity of management. You never get like a report that comes out saying, hey, and if you look at private equity investors, Warren Buffett's of the world, the
Yeah.
best investors, with the first thing they talk about is management. They won't invest in a company without good
Yeah.
management. So we have the
100%.
pedigree. And by the way, the other thing is I'm the largest shareholder, right? I put money in. I'm across the capital structure. It's large amounts of money. It's recent, and I think it's a super important aspect of Jushi.
Yeah. We've covered the biotech industry before too. And I know that science is obviously important, but one of the key things for pharma companies to come in, whether it's endorse and basically pay for a phase 3 trial or anything related to that, they look at the actual team that's in place, especially when a buyout happens. But, you know, you'd mentioned that you used to run a $5.5 billion hedge fund. I think when two people put two and two together, that if there is reform and institutions start to come in, and we touched on this last week during the live stream, having personal contacts in that industry is very helpful. What happens in the hedge fund community? Like, do hedge fund companies get FOMO, kind of like what retail investors get, that if one firm signs a check, does another one want to sign basically a check right away? Like, what's the mindset involved in that?
I would say they would be very upset if I called it FOMO and I was a hedge fund guy. But there's an element to that, absolutely. But they, I would say a more positive way, putting them in positive light is there's safety in numbers, right?
Okay.
So when you're investing in a business that could seem risky because of the federal, the regulation, the balance, whatever it is, it's uncertain tax, liabilities, there's safety in numbers, and I think, hedge fund 101 is to, hey, what are my friends doing? What do they think of this investment? Calling up
Yep.
somebody smart who invests in the sector, and you say, hey, did you look at this? So and it happens like literally in almost every investment, by the vast majority of analysts and portfolio managers, in fundamental areas when you're investing fundamentally or regulated, where there's a lot of laws going back and forth because there's open to interpretation. So I would say safety in numbers, and they feel safer and they'll look at it, and that it's certainly helpful. But I would say it's not just looking forward; it's also looking to how we got here. We've had some of this capital in since we
Good
started.
point.
People who've worked with me, billionaire type people. And then more recently, we did the refinancing of the first liens. A lot of people were very skeptical. Now, that of our lender, the first lien, we had a good experience with them. We weren't skeptical. I mean, they were tough. We didn't like having to deal with them, but that was their MO. But they're professional and they understood numbers and structures and stuff, right? And they gave us a lot of consents, quite frankly, and they didn't break us over the coals. So we had a professional lender in place, but when we replaced that lender, because they sort of got out of that business, but they also got very aggressive and tried to take over companies, which they didn't do to us. And we were able to, we were able to bring in a group, and the lead hedge fund knew of me, right?
Yeah.
I'm kind of long in tooth for people who are, actively looking at companies now. Maybe I knew their boss or the founder, but at my age, most people are, bosses or founders are gone, or dead. But
Give
but
yourself a little bit
anyway,
more credit, my
yeah,
friend.
one of those. I always say but the hedge fund industry never leaves you. You never leave the hedge fund industry. It leaves you. I still have an active hedge fund, by the way, because everybody's like, oh, I decided, no, it's
Yeah,
a
yeah,
great
yeah.
business, but anyway, but they knew, and they checked, they knew of me, they knew of my firm, I had a very good reputation, by the way. You don't get to where I was going from essentially the first firm was 300 million, co-running a 5.5 billion. By the way, when I got there, it was only
Big.
300 million. So we built it up on huge success.
So you
And
grew
then I
from
started
300
one that
million to
was
5.5 billion.
in very quick time. And then I started one it started at 500, 600, and we got to 2.3 billion in 14 months
Okay.
from the day
Okay.
of start, right? And I was the founder. So you don't get there without a good reputation. That just doesn't happen at any time, right? So yes, that helps very much. And then in that deal, there was also a guy who used to work for me. He's a buddy of mine, and he's a great investor, has a nice fund and been growing. And sort of, the first firm came in, and he felt very comforted, by that they were looking at it. He hadn't really spent much time on cannabis, and they took comfort in one another. So it's an example of that already happening very recently, in the middle of last year.
Well, where I'm going with this is just if there is reform, how much interest and how much connections, personal connections, will that actually have when it comes to bigger money actually getting involved in this space? And I think that's going to be a hot topic of conversation that a lot of investors have right now because
Yeah.
there's still tremendous upside, even though obviously the industry is faced and is going through some challenging times from a pure capital markets perspective right now. There are some great stories, key stories that are developing, which is, we wanted to learn a little bit more. And we look at some of these, I hate saying tier one and tier two type companies, but there's some big upside potential for some of these companies right now where their share price has been suppressed. But you
I think it's a
reported,
good framework, Shad. The tier one and tier two. I agree with you. But I think it's a great. I think there's a great framework there of just saying the big and the smaller is the other way to do it, right?
yeah,
So I think it's a good framework. But I think, listen, but I just want to correct one thing that you said. There's still good upside. I don't think the upside's ever been this good, right?
I agree.
Because the stocks are so beat up. So it's never been this good. I just put my money where my mouth is. And I do it every year because most of my comp is in equity. Cash light, especially for somebody who's had the good fortune I've had, it's not that the cash is not moving the needle at all in my life. And so, I'm doing it for the equity. And by the way, if there wasn't an investment in it along the way for me, meaning of the scale that I'm doing it at, I
You
wouldn't
wouldn't
be
put your
here
money in
doing
there.
it as a CEO to get paid this.
I agree.
I'm only doing it because I can make real money by being an investor in the company.
Exactly.
And so they recognize that, by the way, to answer your question, and they will. I'm not, just to comment on your comment, really, but they will recognize that, and they will flock to the quality, especially in this, and really in any guy's company, big or small, right? And it's a huge factor. It's simply known as pedigree. And by the way, I think one of the really differentiating factors, like you first brought up with management, but it's not commented on enough. And I'll just say that again. If people aren't focused on that, it
Yeah.
makes a huge deal.
Well, I look back at that HHS recommendation back in the fall of 20. You guys were trading at almost $4 a share. So, gives you an idea as to like some of the distressed, I don't want to say assets, but share prices that have happened to overcross the entire market right now. But we all know where this plays right now. This is a pure Washington play because companies, I would say month in and month out are doing what they can for now. But let's face it, it's just a pure Washington play. And hopefully Donald Trump and his administration look at things differently. But we'll save that conversation for another day. But some of
Well,
the key,
can I just comment on
yeah, of
that?
course, go ahead.
I'll do it quickly because we're gonna get into our growth story. But I think for the big companies, it's primarily a Washington play. Like Florida went, let's say people started thinking it's going to go in 26. I think Trulieve might double pretty quick, to be quite honest, right?
Yeah,
And Verano would probably go up multiple times. And that's, I don't need to compliment that and promote their stocks, but just, I
I
run
get
a
it.
hedge fund still. And I happen to own both those stocks in the hedge fund. And so, but I don't necessarily. That's not a base case of mine, right? But they have that. But for us, ex-federal, they have that because they just get so much more cash flow and their balance sheet, cost of capital goes down, everything. For us, with Pennsylvania potential, building out Ohio
Good point.
and Virginia, all wrapped up in the same year or two, worst case 2.5, 3 years for all of it to get done, in my view, then, it's game changing. So if federal didn't have a lot, I went into this deal and got a
You'd be
big warrant
okay.
coverage.
You'd be
Yeah,
okay.
not more than okay. The stock will have huge upside, in my view. I just put my money up. Now, I'm not promoting as a CEO. I'm talking as an investor.
Yeah. Well, let's look at those $257.5 million you reported last year. First state I want to look at is Ohio. Currently 4 locations. You want to expand to 8 by the end of this year, correct? If I
Yep.
read the numbers correctly.
Well, 8. It's we're on, yes. 7 is more likely. 8 eventually. By the eighth won't get on to the middle of next year. We're not in a deal for number 8. We're in a
Okay.
deal for the rest.
We're just reading here, 7 by the end of Q3 2025. How would you best describe Ohio in the first 7 months since adult use went live? Because we had some strong numbers out of the gate. We've seen a little bit of price stagnation, I would say, right now, but there's still some upside potential. I was speaking to Kim Rivers a couple of weeks ago, and she's like, this is all part of the process, but long term, this state is definitely going to be at what many people are anticipating it to be. But how would you best describe the first 7 months and
Well,
how it's
it's
operated?
great to hear that from Kim. Because she's she can be skeptical. She's
Yep.
outside of Florida, and so it's good to hear. I like to hear other people having a similar view to me. There's safety in numbers, going back to our
Yeah,
point
makes sense.
before, and but yeah. So Ohio has been a little slow to start. Right. That doesn't mean people don't like weed any more or less in Ohio than they do in, let's say, Maryland or Missouri. It just means that the program and the setup is differently. So one of the factors in a very large factor in cannabis is convenience. And the store count started rec at a much lower level, right? And than a store, on a per capita basis in like Maryland or even Pennsylvania if it goes, right? It's like, it's Pennsylvania wasn't 2x, but it's close to 2x the number of stores when it goes rec. Same size population, more or less. So point that out. So the
Gotcha.
uptick in Pennsylvania, because convenience, because they have the black market, they all have the option of alcohol, and that's a very important point. So that's one factor. The second is it was done by this vote, that they did, and the legislatures never came on board. So the program was sort of never improved, since we've started it. And there are things that are very, very difficult that don't make a lot of sense to me, like marketing and advertising is very difficult. You open up a new store, how do you know it's there? Like, now there's ways to do it, it just takes longer, right? and and
Yes.
and it's just word of mouth, and word of mouth is one of the most effective. Your storefront is very effective. There's a lot of effectiveness, right? But it takes longer. So, those are two examples, but there's a laundry list. Pre-rolls people talk about. There's a
Yep.
laundry list of things that are out there. So those inevitably improve in every other market. Things change, and they get improvements. And a lot of it's in polls and the politicians. But for Jushi, okay, so let me separate. There's a lot of people who had their 5 or 8 stores already, right?
Yep. Yep.
So if you look at companies like GTI, no, who were Air,
Cresco.
Cresco, yes. Even Columbia, they had the Columbia Care. They had most of their stores lined up already, and big grower processors, and a lot of them had expanded to do that. So they were put capital in the grower processors, but everybody thinks their capital is expensive,
So you've
right?
seen short-term growth based on your current numbers then of
Well, no,
expansion.
for them, they got the uptick, but they don't have opening up a ton of retail stores and expanding your grower processor to get a vertical business. For
Right.
Jushi, we had one store, we had one license to open a store, right? But that was it, and a very small grower processor, which we
Yeah.
could talk about. But so for Jushi, the story is like growing the business through acquisition, right? And opening stores. We have one license to open, which is a great store, by the way, and then increasing our grower processors. The fact that it's taking more time for that market to mature is a benefit for us. The
Yes.
fact that there's extra grow capacity, we were very concerned about that because people were talking about 3x and there wouldn't be any extra weed out there. How are we going to put stuff in our stores? We can't build our grower processor that quick to the right capacity for 8 stores. So for us, it's worked out to be great because we have product to buy from them, their branded product for our
Yeah.
customers,
Yeah.
right? And we also have the ability to buy bulk from them and put it into our packages. So it's worked out really, really good for us. And also, by the way, because there's some, hair on it, and it's not like, oh my God, Ohio's the most amazing market. It probably makes prices, less expensive.
How do you best explain, I guess, the wholesale opportunity in the state and really leverage your wholesale bulk biomass and vertical sell through to really maximize growth in the state?
Yeah, so Jushi has a little bit different strategy. It's great way to frame a question, but we have a little bit different strategy in wholesale. So we've also always been one of our strategies has been retail first, right? Which
Yep.
I think if you talk to any, top cannabis investor or the big CEOs or small, they would all say, yeah, I need more retail. None of them say, yeah, I wish I had more grower processor. You sort of almost never
I
hear
get it.
that, right? So and grow processors age poorly. So something you put into the ground 10 years ago or 7 or 8 years, years ago, even 6 is not technology you'd employ, so it's less efficient. Where retail sort of, you put a little capital in to freshen it up, paint it, do this or that,
Right.
some art, it's fine. So I would say we've had the right strategy of retail first. So we don't focus on having a huge wholesale business, but we focus on using it a bit as we're growing our distribution in this case. And we want a wholesale business, don't get me wrong, but we're not building a lot of excess capacity for that. What we try to build our grower processors is we try to target our peak sales, right? Because sooner or later states start to go down. You need to get into Texas and Georgia and states like that in the future, right? Or Florida for us.
Yeah.
And as that peak goes, we try to target like 50%. We make 50% of the products for our stores because we want to offer customers choice. And customers love Beyond Hello because of choice.
Of
They
course.
love it. We're not just trying to jam stuff down. So I would say retail, giving customer choice with
Yep.
third-party products, not Jushi's, and we use wholesale to balance it all out. So in Ohio right now, we're balancing it out through wholesale we're heavy in certain genetics because we have a limited grow and you usually grow about 4 genetics in a room, and then you get too much of one genetic and you sell that, and then you buy
Yep.
product from other people, and so you balance it in your storefronts to your customers.
What are you seeing as far as consumer data in Ohio? Like, is it different from, say, Virginia to Ohio as far as choice? Like, what do people want differently in Ohio, let's say, in a prime example, in, say, Virginia or Pennsylvania? Do you know that?
I don't actually think it's that different around the country. I think
No,
it's different in every state based upon income levels.
of course.
So if you go to a lower income community, on the lower part of the scale, concentrates will sell better, right? Because you got a lot of bang for your buck, right?
Yep.
Things you get bang for your buck will sell well. A big format like 1 ounce bags, half-ounce bags, that'll sell well. They're getting better bang for their buck, right? And distillate vape carts might sell better, as
Yep.
concentrate product
Makes
too.
sense.
And you go to a highest income community, you're going to get more pre-rolls because you're paying more for somebody else to do that for you, or not using a bong or whatever else, all your different or pipe or whatever. So
Yep.
so you're paying more for that. You're going to get more high grade flour in there, right? Flour is popular everywhere, but you're going to get more high
Popular.
grade flour in there. But very importantly, we found gummies, solventless, even hydrocarbon products, full spectrum products, particularly solventless. That market will go into the higher income. So that's how I look at it. Now,
Any
in
mark?
Virginia, for Jushi, we're in a very high income area. The per capita incomes in Northern Virginia are, in that footprint that we have exclusive right for retail, are probably the highest in any cannabis footprint. So we see a ton of. That's why I'm saying this. We see a ton of
There's a lot of white collar
gummies.
jobs. Yeah, a lot
What's
of
that?
white collar jobs in and around where you're based in Virginia. Yes.
Yeah, and it's also a thriving economy. It's a ton of data centers going up.
Yeah.
Even if you're blue collar, you're getting paid a lot, or you're plumber, electrician, you have a great business. So just generally the incomes are up all over, and it's an expensive place to live, so you need the income. So if there's, so it's a great area for gummies and for like solventless and by the way, new products in general. But it's not that great for big bags, like 28, gram bags. But by the way, when we sell these to other, in wholesale in Virginia, when we sell them in other areas, it's a bigger bags, it's the distillate, that's what we can sell because not everybody in Virginia has the income as we do in HSA too.
Yeah. Let's focus to Virginia now, another key growth state. And there are a lot of questions I have pertaining to this. We all know Governor Glenn Youngkin most likely is going to veto this latest cannabis bill. Before I get into How do I pronounce her last? Abigail Spamberger. Am I pronouncing
You
it? Yeah.
got it. You got it. That's you
So
got you got. That's why you're good at this job. You have the gift.
there you go. Do you think she is going to be the next governor of Virginia?
I do.
Yeah. Why do
Yeah.
you think Youngkin is just so against cannabis? Like, what is it? Is it a generational thing? Like, he wants no part of this conversation, period.
Yeah. On the real quick on Spamberger, she's a House representative. She's
Yep.
highly regarded.
Yep.
Um, she's what's at the CIA. She's a moderate, which works pretty well in Virginia. And she's a great candidate, right? And she's up by 15 points.
15
So
points.
if I'm on the betting sites, which we can't do in the U.S. as far as I know on politicians, I've never done it before, but I mean, you're not getting paid to pick her if she were on the betting sites yet. And so that's not me being brave. In terms of Youngkin, with him, I think he is very smart. So I don't think he's not smart enough to understand it. But I think he claims to be a religious conservative, and has this religious thing. So I don't know if that affects it or not. But
Yeah.
that's part of his campaigning and stuff. And I I don't know him, but I think his big thing is putting up a political sort of framework to compete with JD Vance and um,
Yeah, I get
uh,
it.
maybe Donald Trump Jr., who's been talked about recently today, but importantly DeSantis, and that's where he wants to set up his legacy from Virginia.
Yeah, I get that. Well, the reason I bring up her name, 15-point lead, that's a pretty healthy lead. You
Yep.
mentioned this to me last week offline, where the last 30 years, basically the way the governor's race has panned out in Virginia, it's been two Democrats, followed by one Republican, two Democrats, one Republican. Youngkin, obviously Republican, to then segue into another Democratic governor, which is Abigail Spamberger, which is why we're kind of indicating here that she is a Democrat and looks at this very favorably. How would you best describe? Because I know, yes, Virginia does get talked about quite a bit, but not enough. But for those still are trying to understand what the upside potential is within that market, how would you best describe it?
Well, from just commenting real quick on the political, I mean that's absolutely true. Yes, remember where we are in HSA2 is very much like a city urban, which tends to be much more
Yep.
populated. Yes, it is. We have the largest population mass, like a third of the state, or some number like that. Maybe it's only 30%. And highly educated tends to be more, Democrat, and so that drives a lot of that. And of course, you have Charlottesville, university town that's very big. And there's other so in terms of the upside in Virginia, it's just massive for us. We invested. This is the part that the way we invest real quick in Ohio is we're buying licenses one at a time, doing all this really, really hard work, and then opening the stores, as opposed to buying cash flow stores. I pointed that out in the call. So that makes us be able to buy things, really inexpensively. The way we're doing in Ohio is we're building the grower processor, to be mostly the long-term strategy, support our retail, because we're late and we're not going to get to early wholesale. Okay.
Yep.
So we have that now because of the genetic thing and some of our processing and the trim. We have it now, but over time that'll go away until we make the investment, and we'll size that to be a smaller part of the market. Right. Virginia, so completely different Jushi investment. We've invested and opened up all 6 of our stores. We have expensive leases in all of them. We're still our highest margin state. We have prime locations, which are more expensive. In one case, in Fairfax, which I know everybody's heard of, it's great. We were competing with Wawa. They dropped out. They would have taken Wawa, big gas station company. I mean,
Yep.
it's one of the most successful private companies. And I almost only go to Wawa stations. And I'm a Pennsylvania guy because of Jushi in Pennsylvania, so I'll use Sheets too, which is the other Pennsylvania family-owned company. They're great, great at this. It's more like a food store in there and quick
Gotcha.
serve. So and it's huge parking, like 50 huge number of parking spots, 2 ways in and out on stores where Shell is across the street with huge amount of traffic. That's where you put gas stations, right? There's like 2 gas stations, I think, there. So that's an expensive lease. And we built out massive number of capacity to go rec because we said it's going to be rec. We know that.
Yeah.
So let's just build it that way. We had the capital. So each one of our stores have this. So we have the capacity to turn. We know what a $35 million store looks like because we had that in Sauget when Missouri wasn't rec. So we had 1 store. So we know the kind of capacity. So we built it to serve a lot of people in a beautiful way, in a very customer friendly, quick way.
The way you paint the picture right now is people want to see and hear what you're doing, but the way you kind of visualize theater of the mind, it's just like, okay, you're in Virginia, but where's your locations? Tell us more about why this location. But that's a prime example. You've got one of the most successful private companies, a gas station with heavy traffic like that. It's expensive lease, but the location is key. But you're seeing a lot of the benefits from this location, you're saying?
Well, in medical, not so much, right? You don't need the excess parking; they sit empty, and we're not using all of the things, right? And we have huge vault capacity because when you do the volume, you need vault capacity. So no, it's kind of stranded investment at the moment, which is a point. But when rec goes, it's just we turn it on, right? And we'll be able to sell huge amounts of product, and a lot of people were trying to buy our Virginia asset and Jushi at one point, what turned out to be way too cheap. So I wasn't a seller, or the board wasn't a seller, and never went that far, but it was very significant. And these, that we got you get the most senior people in your facilities, in some cases, the most senior. They were like, oh my God, this is unbelievable, right?
Yeah.
So Fairfax is a great example, but everyone is like that. Literally, Alexandria, you're on like highways going everywhere. I mean, it's nuts. Huge parking, former restaurant. It was a Sizzler steakhouse. And again, big lease, a lot of CapEx up front because they're big. That's more CapEx, right? More square feet, more CapEx. So no, we're not seeing the benefit of that. It's still our highest margin state. Love it. I mean, our margins are incredible in Virginia, right?
It's interesting.
So we have this. We have the 6 stores, only 6 stores, but we have a huge amount of capacity to serve our customers. Important is the number of stations you can sell at, the size of the vault, and the parking spaces. That's it. And also location. And by the way, we signed these leases by and large during COVID. We would have never been able to get this. We had people who would have never signed up a cannabis company. It was really hard to cite the stores in Virginia. They would have never signed, but they didn't have anybody else. I mean, Wawa didn't want it, to be clear, ultimately, but they went down the line. And it might have been a CVS before that. I don't know what it was. But but the point is it turned out for rec, our retail footprint, the way it's built, is a tremendous advantage. And then the GP, we also, during COVID, our landlord wasn't a seller, right? Our landlord at that time, we own it now. Our landlord was a nightmare. I mean, it was like, oh my God, this guy just drove us crazy. And that's a bad recipe. Now you kind of see that a little bit now with people, having difficult situations with leases and stuff. But they turn into your partners, right? You need approvals. They own the building, so and they had a land in the back. We were able to buy them out of the whole thing for $21 million. Huge. By this is in data center country. There's data centers around us. The value of that land has got to be up very significantly, and
when did you buy this again?
The first year of COVID, I don't remember if it was 21, but we would negotiate it. We try to buy them out forever for cash. We did that in our cash. So we don't have a lease. By the way, that makes it high, obviously very high margin because we don't have a lease. And so that's and we, by the way, we bought a store in Alexandria, not Alexandria, in Arlington that we would never have been able to. It was a milk factory, really cool thing across from Whole Foods, 3 or 4 minutes from Apple Store, 2 subway stations into DC, and a lot of density because Arlington is a suburb of DC.
So you've outlined some healthy margins, and
but by the way, just real quick on that.
Go ahead.
Interrupt, but that gives us the ability to expand a new warehouse, potentially put in some greenhouse, if the regulations allow it. And so we will be a big wholesaler because we'll be early. There'll be no other games in town. And so, it's a tremendous advantage that we have. I mean, we could put in some huge number, like 250,000 square feet. We've already seen that doesn't work. People have empty, so we're not doing that. But we could if we double stacked it, not double stack, but two floors. But anyway, it's a huge advantage for us to get huge upside
Yeah,
over
no
time.
kidding.
That part takes capital investment. Retail doesn't.
So healthy margins, you're expanding your cultivation square footage in due time, and you have the launch basically of your brand Flower Foundry. What are you seeing? Like, why are people liking this so much?
Okay, so in Virginia, remember, we're a high income area.
Okay.
People love variety in cannabis. This isn't a
Yep.
juicy thing. You go into a store, and this is, by the way, beyond hello. One of the things we don't talk about very much is our retail strategy being very different from everybody else's. We really see it in Pennsylvania. You look at the ratings on Reddit, we do fantastic. People love it. High service and a big menu. And we have everybody. We have all
Okay.
GTI products, we have everybody's products in there who will give us the right price, by the way. And we negotiate very difficult on that because we have nice buying power. That's Jushi's strategy. So, and we think customers love it. In Virginia, there's only 4 licenses open, so we don't have that many products. So in Virginia is our area to put new products out first. The clients eat them up because they want variety. We always base them around something, or we try to always base them around something related to like new genetics. So it's not just smoke and mirrors or
Yeah.
solventless. Our solventless products, we have a brand for that. So, Truly, even Florida, was pretty Masterville in their strategy. And we learned from this, they took all these California, Colorado products, grew all the weed for them. Maybe they got their genetics. I don't know exactly, or if this, the form, they did it. Their employees, but they created this brand concept in their retail stores. Nobody talks about why they get so much sales, right? Like again, nobody's doing the work to the detail they should in this industry. But I have to believe the fact that they have so many brands. Nobody did it to the scale. Nobody had the number of stores. Nobody could probably get the deal. We don't have that in Virginia. In Virginia, what we have is we got to create our own brands or get them for GTI or
Yeah.
Verano at this point, or Columbia Care, and there's room for plenty more. So that's the brand stuff. Flower Foundry is a great brand. We built around new genetics, some great testing flower. We're really super excited about it.
So fast forward, we're in what, March now? The election's what, in November? Spanberger wins this election. She becomes new governor of Virginia, and we're having this conversation. Like, what can you anticipate next regarding adult use, early parts of 2025? Like, what can we anticipate and be prepared for
I
if
would.
and when?
I think it's either effective. It'll be effective at the beginning of a quarter, July 1st, October 1st, January 1st. Sort of March or May 1st, something like that.
In
That from
2020, in 2026.
in 2026. Wait, hold on. No, it could be effective immediately in 25, right? It could happen to be effective July 1st of 20. Well, we're in 20. No, we're in 25, right?
We are in 25.
We're in 25. I'm sorry. Yeah, 26. So it would be July 1st, 26.
So you're looking at 12 to 18 months that you think that there's a realistic shot that adult use could go live in Virginia. That's what you're thinking.
Well, remember, I just put money in with a lot of warrants attached. I actually believe it's a high probability event. So,
well, another high probability is the stuff that's taking place in Pennsylvania. And this is the biggest state as far as growth opportunity for you. 40 dispensary locations across the country, correct? That you guys have within your portfolio?
correct.
And 18 of those are in the Keystone State. So this clearly
Correct.
has your attention, to say the least. What would adult use mean for the industry and your story if adult use finally goes live in Pennsylvania, something that many people in this space have wanted for a number of years?
Well, for the industry, I think it starts to turn the tide in the absence of federal. Federal would also turn the tide.
Yeah.
But I think it starts to turn the tide a bit on people's look. But even the larger companies, I mean, the large companies, have large footprints in Virginia. We're the only small company with sort of the big number like this. But the large companies, I
It's
think,
a
would
big
see a
number.
meaningful uptick in their business. I
Yeah.
think that, right? It's just the math, right? And the large companies and us, we all have ability to bring on capacity. So you'll have so it could be a big market quick. So like I said, in Ohio, Pennsylvania may have like 2 times the number of stores going from medical to rec. You don't actually need a lot more stores in Pennsylvania. You might not see it in the bill, which might be a good thing long term. I think it's a good thing for everybody, including the entrepreneurs who lose money opening up all these,
Yeah.
licenses when there's too
Yes.
many. But the facts are that it might turn the industry for Jushi. I mean, like, how aren't we the biggest beneficiary? I mean,
Well,
and it doesn't take a genius to do the math. I'm not going to actually throw a number out there for a lot of reasons, but I would point out, allow people to play with models or just think about it, depending, or do back of the envelope. But if you look at your business,
yep.
last time I checked, when it goes rec, my leases don't change, and they're not going to change. I'm
Yeah.
kind of, it's a fixed cost, right? and and you have an underutilized grow up capacity, you could bring on capacity in the warehouse. For us, we increase 50, we can increase by 50% in the warehouse. And by the way, we can increase by almost 50% or more in Virginia in the warehouse, and we're doing it. Just, I didn't point that out in Virginia in the existing warehouse, right? Which will help us. We need that for the medical market. For rec, we'll need even more, right, in Virginia. But in Pennsylvania, we have a lot of capacity to bring on. So you get the running more through a fixed asset. Electricity really changes some, but not that much.
Yeah.
And employees increase some, but not that much. Efficiencies go through the roof, right? Because you're just processing more through the same machines, or adding one more machine how to use already. So it's going to be amazing. And then our distribution, and so, like, what I'm trying to say is your incremental margin, your EBITDA margin, your incremental cash flow is a lot higher than it is now. So whatever Jushi's margin is now, right? For your assumption, gross margin or EBITDA level margin, right? That's the reason why some of the big guys get so much uptick if you have Illinois, right? Because if you look at the higher margins, they're typically in Illinois, which has been a great state historically, right? And then Florida's a great state because it's vertical, different reason, there's high
Yep.
margins. We
Yep.
see it in Virginia, by the way, similar to Florida,
Okay.
from what I can tell. But when you take a state like, it's as big as Illinois, and all of a sudden you get rec margins in the first couple of years, yeah, they do decline. There's more competition. All that happens.
I get
But
it.
the first couple of years is going to be tremendous. And our cost of capital will go down so dramatically. Like, it'll be like, a huge ability to get better deals on credit, bank loans, refi of the notes, everything.
Yes.
Stock will do well, I would imagine.
I think that's the angle. The way that you've weighted basically your business model and the locations in Pennsylvania, which is why I think, from the get-go, why we wanted to have this second part of this interview with you, because again, great job, obviously, on the balance sheet from last week's earnings reports. But one of the key reasons that we're trying to create is understanding a story within the story. And you kind of explained it right there indirectly on, look, it's going to be an uptick for a lot of companies in the space, especially if adult use does get passed in Pennsylvania. But given the size of footprint that you have, that's just as big, if not bigger, than a number of the tier one MSOs. And that takes up almost 50% of your overall footprint across the country. Now you can understand the story that you're trying to build here and why these key states are big growth states for you, right?
Yeah, exactly. I think our retail footprint is as big as anybody other than Trulieve has 3 more stores. I think our grower processor is right up. I'm not current on Trulieve, but I think we're probably bigger, have more expansion capability than Trulieve there. But I forget exactly. But so we have the capability to be as big as anybody in Pennsylvania. And by the way, the Beyond Hello, the ethos of Beyond Hello, what I'm the customer first, right? Focus on the customer. One of the things customer wants is prices. They
Yep.
want to be serviced well, but they
Yep.
really want variety. So if you look at some of the other companies who came out of some of the larger states that were very vertical, they have these huge grows, right? I think Florida, Illinois, right? Their model is to jam as much through there as possible,
I
right?
get it.
So their choice goes down. And the way you do that is produce good product, and a lot of them do. Not all of them, but a lot of them do. And the other way you do it is by pricing your product much cheaper. So there really isn't variety on a price adjusted basis. And the shelf space is I mean, I don't know what they run vertical. People don't talk about that state by state, but I know it's very, very high. We interview people, and it's a very, very high number. So I guess my point is last point is I believe we have the right retail strategy long-term in competitive, cannabis market. And you build that reputation of product selection, having that, servicing the customer. We get great reviews on Reddit. People love our Hello Club, which is our rewards program, which has been around for 4 or 5 years.
Need to see
We have
more of that.
yeah,
Smart.
yeah, yeah. We're on the Apple app and we're on Google Store, and we have for a long time, and we have free messaging on iPhone. It's great, right? So
Who came up with the
we
name Beyond Hello?
they did our Pennsylvania. It was kind of this whole concept of high customer was them. Now the retail strategy of selection was really me and Dre, who and
Of course.
Trent. We diligenced a lot of things in California, right? We did some stuff in California. We lost some money, not too much, thankfully, but it was only retail, very thankfully. But and I cut the cord pretty quick. But we learned what people like in a competitive market, and that's key. Remember, Trent Rollovac comes out of Colorado, a little more vertical market than California, so we had both models in our head. So, but the patients and customers love variety, and they love choice, and they love convenience. All in one place makes their life easy.
A lot of positive momentum building for you. Any challenges? Like, what are questions that you get asked that you want to see improvement on over the next year? What would they be?
So I would say, I think in Pennsylvania we took over a facility from Vireo, who's really kind of unwound, and now they're coming back to some, a different story. And we got an unbelievable acquisition, 3 stores for $5 million. People were paying $50 million for 3 stores, right? And a different kind of, they weren't great stores, but we've moved a bunch of them. We made them much better. But then we also got this grower processor really, really inexpensively. It's the only time we took a lease on was that, one of these, long, forever leases, which we don't like, and we haven't really taken much more on it. But I think the product quality reputation has taken, it takes a long time to rebuild that facility. It wasn't built on the right standards. Old school, grower processors, even from, Cresco or GTI, I would imagine, aren't up to their standards. I know that because I talked to people who work there. But they build amazing stuff now when they build it, right? Because they've learned a lot. It's different equipment. But can you imagine undercapitalized, smaller company? So we had a great warehouse, a great infrastructure, but it's taken us a long time. So our biggest market, we've had, value, very good in the value segment. When you saw everybody go to the value segment, we were big in the value segment. But that's unfortunate. You really want to be big in the quality segment and then move down like they did. So we're going to the quality segment. So that's one thing. And how do I know we're doing that? Well, Nevada, we have top tier flower throughout most of our grow. I mean, the whole thing really, super high testing, super high yields.
Yeah.
Ohio, we have it. And Virginia, we have it. We've had the best in the state. I think GTI is going to come on big, and because they put a lot of money into the state. But we've had the best flower. So we feel really good about our capabilities. We're getting there in Pennsylvania, but we have upside there in Pennsylvania with that, and just as a company. So that's just one thing that we need to improve more on, and we get more margin. By the way, better flower you sell for more, right? It's all the same cost as everything else. So, or you have better value, right? Because you're giving better, potency and terpenes to the value segment. So super focused on that, building on those successes. And the last thing I would point is we spent a lot of time on the uncertain tax liabilities for all the industry. But I think that's something where I think there needs to be a divergent view. I think there's a very simplistic thing everybody's in a bearish mood. You sound very smart when you're bearish, right? Like everybody knows this. Like if you're raising a hedge fund, you sound bearish, and very skeptical. People love you, but usually the bulls make all the money, so the bears go out of business eventually because they never put money to work and they're too, there's our cases where it works. But I think there's not a divergent view on what I call a tax dispute versus tax debt.
It's understanding the opportunity, and then once you understand it, timing becomes everything. And I think that's where we're at, right? I think that there are some companies that are in some rough waters right now as far as their debt and if they can extend it. And let's face it, there was a lot of infrastructure that was invested into the state of Florida. And I know probably a lot of people such as yourselves were thinking, how do we get into the state? But obviously with adult use not passing in November, it's almost like probably the safest move sometimes is no move at all. And when I look at Florida right now, it's like, how does that start to pan out? I don't want to take anything away, though. It's still a $2 billion medical market, but for
Yeah,
what people were
yeah.
hoping to see,
No,
uh,
we're headquartered in Florida, so we're very close to it.
yeah,
For somebody who's not in the state, and I live here, yeah. And listen, I had mixed feelings about Florida going left. Let's just put it that way, because I knew
did
it'd be
you?
good for the stocks. My cost of capital would go down, and I have a lot of friends who run those companies and are involved with those companies, so I had mixed feelings. Um, but I wasn't nearly as sad that it didn't pass as other people. And as a distressed person, somebody who likes to buy value, I get super excited about that opportunity.
Sure you do.
So yeah, yeah.
Lots changing. Well, listen, good to see you. Former hedge fund manager now in the cannabis industry. And I love the comment you said. Well, a lot of guys that I talk to now, the guys that I got involved, I don't even know if they're around anymore, if they're even alive. Well, it's good to see that you are alive at 62 years old and getting younger by the day, my friend. But listen, great story. I wanted to give people kind of a better understanding as to like why these three key growth states are important to your story, and understanding and defining a little bit more as to what can people anticipate moving ahead. But you explained it well. But these are some of the stories that I think that we really need to understand as the industry starts to mature and change, especially in the event we get some sort of reform announcement. But even outside of that, these are three key states that even if adult use flips, looks like a great opportunity for you. So I appreciate all the feedback.
Yeah, no, Chad, thanks for the opportunity. And just to do I know you love when I do math. So 18,
Let's do
right?
math with Jim.
Let's do math. 18 in Pennsylvania, 6 in Virginia is 24. Ohio's going to be 8 now they're not all open, so let's
There's
use the
80.
4.
There's
It's almost
80%.
5. It's
That's
almost 5. 5's
80%.
about to open. So let's use 5. So 5 I lost track of the math. It's
18
29.
plus.
So 29, add the one more for Mansfield, which is opening soon. So 29 over 41 is where we have growth.
You're just under
29
75%.
is a numerator, 29 stores, Ohio, Virginia, Pennsylvania. And so like I think your focus is correct. I think focus on this is a growth story, and that's why I'm out there now. I wasn't out there before because it wasn't a growth story. It's not a lot of fun talking about firing people and doing efficiencies and also refined debt. None of those are fun or easy to talk about because it
I
just
get it.
depresses your workforce and your lenders. You have to be careful what you say from an SEC standpoint, and you just got to get it done. So I'm super excited about the
I know.
opportunity, and I think you're on the right road here on the way you're looking at this.
Well, I look at certain companies with some of the announcements, the cannabis that extended their debt out to 2028. I don't want to sit here and say that you were in that same situation when it came to debt, but the reality is that it all comes down now time to execution. You've done that over the last 12 months, and this is what people want to see. What are you doing with your time? And this is going to be a question for a lot of companies, but we're getting a clear idea as to where you guys are headed. But this is great. Let's do math with Jim, presented by Jushi Holdings. What do you think? Is that a good segment we should have every
That's
Friday?
awesome. I love it. I love it. Yeah, yeah.
Listen, tell the team I say hi. Tell Trent I say hi, along with Dre. These are some of the most respected people in the overall industry, but not just words, but you really have, recruited some. Trent is very well liked, very well connected person with what's going on in Washington and on the state level in Pennsylvania. Always gives us a lot of great, accurate information. And then who doesn't like Dre? Man, that you could just sit down and have him talk about Iggy Pop stories for like probably a good couple of hours, but legendary guy that's been around, but some great stories. But you more or less, I say these things in addition to the people that you've worked with, your founders. You've built a really, really good team behind the scenes that I don't think a lot of people get enough credit for. But hopefully that pays obviously dividends for you for if and when institutions start to step in and analysts start to review this industry a little bit more and more.
Yeah, one thing just to wrap it all up
Yeah.
is okay. So good stuff happens, right? Let's just say good stuff happens because not enough people are saying that, right? Good stuff happens. Your cost of capital goes down, which means your stock goes up. Your credit cost goes down, right? And so let's assume that. Then what's next? Why are institutions investing in Jushi? Well, we're a team that made it through the bottom, right?
Yep.
Without dilution, our common share, our total fully diluted shares is I think down from its peak right now. And it's since because the peak was probably in 21 or 22 or something, right? And so and then, but what are you doing next? So we become this acquisition platform, right? Who else has that? I think if you
Great
have,
point.
right, who else has that? I mean, there's a couple that have that, but not many.
Is
And
that the goal,
we have a
Jim?
growth. Yeah.
Is that the goal, acquisition eventually?
Yeah, I mean, that's the goal. I mean, we either get acquired, which, we wouldn't do it if we don't get paid well, and it would be a stock deal. So I would want the upside in that stock because I'm not a seller of the industry. I'm a buyer of the industry. And but there's some people we fit with well. I don't want to go into that. And there's a lot of people have contacted us. But having said that, that's not happening now. You can't do deals. You cannot do deals, corporate deals in a sector like this with the tax liabilities and the beat up prices. Once people get used to tax liabilities and blah, 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 and everybody has them. So you're trading tax liability for tax liability, but the beat up stock is the real thing, right? And so that's not happening. But having said that, base strategy is we grow through acquisitions. Like you said, Florida would be a state I'd love to be in. We love early medical. Georgia's a state we've already focused on.
Yeah.
And Texas is a state we've already focused on as two examples of conservative states where you could start early. Everybody else is focused. But if you're selling to other people, you're getting cash, you're getting cashed out, you're not in a growth story. These people have these licenses like good management, and they like the fact that we have, growth and we have skin in the game. They love the skin in the game.
Well, I think you said it best. You've actually entered into markets before they actually are more well known. And, in due time, you look at Texas and you mentioned Texas, that's going to be a banger state if and when the opportunity does present itself, which we all know it will in due time. But it's a great story, as far as what you're building right now. And it's one thing to make a deal because you have to, but it's another if you can just sit back, be patient based on the execution that you have done, for certain companies within the space, because we all know that, there are some companies in situations where they have to make a deal regardless of what way the industry or the company is going to go.
Exactly.
And that's a situation you don't want to be in. But listen, always appreciate the time to catch up with you. Hope people got a lot of great feedback. Leave some comments below and let us know what you think of Jushi's story and what they've done over the last 12 months and really developed quite the story and the angle. Anything that we missed, feel free to leave some comments below and I'll reach back out to Jim and get back that answer and feedback from you right away. In the meantime, sir, you enjoy the rest of your day and let's keep in touch, okay?
Thank you. Appreciate it, Chad.
All right. Thanks, Jim. Hey, everyone. Thanks for watching our latest podcast. What'd you all think? Is there any information that we're missing? Is there anything you want us to cover? As these industries heat up, we're getting access to more and more big hosts. So let us know the questions that you want us to ask for you. As usual, smash that like button. We want this to go viral. Click on that bell for all notifications for the latest interviews that we're doing. And as usual, let's build this community. Subscribe to our channel because we appreciate it, because we wouldn't be here without you. Thanks for watching, everyone.